Absolutely. I believe we were going to just listen in to the management of Mahindra & Mahindra as well, because they're speaking post their numbers. Let me just check on that particular front in case we are actually listening.
Tech Mahindra and Mahindra Finance unlock full potential, and for our growth gems, a 5x challenge. So let's look at how we've done in this last quarter. Let's start with auto and farm around capitalizing on market leadership. In auto, SUV production is up significantly. And as you would have seen our July numbers as well, it's up even higher. A number of problems around semiconductors have been sorted out, and we are producing at capacity at this point in time. Okay. Rajesh and Vijay and Velu and team will cover the auto business in more detail. I wouldn't say that the semiconductor problems have gone away completely and won't surface again. I think the team's done a great job in taking care of them right now. There's always a possibility something may come up and there may be some issues in future. In the world that we live today, we don't take anything for granted. Operating leverage has driven margin improvement and has been reflected in the profits as well. What you see on the bottom line there, the profit number is up 3x at 1400 plus crores. That does include a benefit from KG Mobility, which was the old SsangYong, because as KG Mobility took it over, it's doing better. The stake that we had has resulted in a gain of 405 crores. So that 1400 number should be you got to deduct 405 crores to really get the ongoing auto business, which is still up 2.2 times, which is significant. So just sort of again pointing that out as one of the drivers of it. The EV programs are on track, and again Rajesh will talk about that in more detail. So overall, auto business has been really firing on all cylinders. The farm business, while there were a lot of expectations about a tough year and a tough quarter, it has actually turned out fairly well. It's a very resilient performance in light of all of the other challenges. And what we see in the farm business is a profit growth of 21% as well. Moving forward then, Mahindra Finance is very well along its turnaround path. We've been talking about that for the last few quarters. Some of the key highlights here are that the asset growth momentum continues at a fairly significant pace. Asset quality is the single most important factor that we are driving in this business. And asset quality has resulted in gross stage 3 being at 4.35%. This is a number that was at 16 and plus percent 2 years ago. And net stage 3 is at 1.8%. So a number of actions have been taken. We've talked in the past about what we were going to do, and much of that has been done, which is being reflected in these numbers. As a result, what you see is assets under management have gone up by 28%, and as I mentioned earlier, profits up by 58%. Tech Mahindra has had a tough quarter, and there were a number of reasons for that. Margins are down, profits are down. There is a clear path to drive a turnaround in this space. And with Mohit Joshi coming in as CEO, he's joined now. He's spent a month or so in the role, a couple of months in the role now. And as he outlines his plan going forward into the future, I would look at this as similar to the Mahindra Finance turnaround that we had started about a year and a half ago. And that's something that we will initiate in TechM now. Our listed growth gems, logistics, hospitality and real estate, are all positioned very well in their industries. Logistics has seen some challenges from the implementation of the integration of Rivigo, and those are behind us now. So you'll see improvements in that going forward. Hospitality is on a very good track, a huge amount of demand. The business is positioned very well as a leading player in family vacations in India. And the real estate business is on a very strong track also in terms of much more aggressive growth. All three have outlined plans for a 5x growth in the next 5 to 7 years. And the final point that I'll make before I hand it over to Rajesh is we continue to deliver on our commitments. We've talked about 18% ROE. We are at 24% right now. And no, that does not mean we're taking the bar up on ROE. 18% is a very strong bar to have. We will continue to maintain that bar. And as we invest in further growth, we might see that 24% come down to 18% at some point, but we feel that that's a very strong bar to have. That's what will enable our 5x growth challenge for our growth gems and really driving that. EPS growth has been 60% as compared to the 15 to 20% commitment that we've delivered. So overall, a very strong quarter, lots of credit to all our teams.
All right, so that was the management of Mahindra & Mahindra addressing the media post their numbers. Also, you had Mahindra & Mahindra come out with their clarification on their RBL investment, saying that they have invested in this company with a long-term view, and they also, as of now, not decided to up their stake, but if they would, 9.99% stake is till how much they can go ahead and up their stake in RBL Bank.